Good morning, Steve Free in Chicago with the morning grain comments. Well, beans are up about 10 cents in the July. Meal is higher, oil is higher. Corn's about unchanged in the July at 6.36, while Chicago wheat's up 3 cents, Kansas City's down 3, Minneapolis is down 3. Stocks are higher, the dollar's a little bit higher, and crude has turned a little bit lower. I think over yesterday we were trying to call the grain markets higher because of wintry conditions returning to much of the Midwest. Here in Chicago, we were greeted with some flurries today, icy conditions, cold temperatures, windy conditions, and a little bit of challenge in getting commute into the city today. But the wheat market actually traded lower overnight, especially led by Kansas City. There was an American model yesterday at noon that put widespread rain over the entire HRW area. Overnight, those maps have gone drier. So I still think there's some concern about dry weather in the southern plains. There was a few rains in eastern Kansas, but I think the overall forecast is for drier conditions. Here in the Midwest, it's cold. It'll delay plantings. And in the northern plains, snow and cold weather there will also delay plantings and give a real shock to any early corn that might have been planted, especially in South Dakota, that might have been up and out of the ground. I think in the bean complex, the nearby soybean situation here in the U.S., supplies are tight. The 7-year low in U.S. carryout, only a 4.8 stocks to usage ratio, keeps conditions tight until new crop. Lower Argentina crop is also supportive, but the Brazil crop is record high and continues to offer some competition for U.S. soybean exports, especially to China. There was some talk about a couple of cargoes that may have left Brazil for the southeast U.S. coast. Over in the corn market, again, you have the struggles going on between old crop supplies. Market has rallied since the March 1 USDA stocks report, and also ethanol margins are improving. On one hand, China is buying U.S. corn, but on the other hand, our corn export commitment continues to be well behind last year. Still uncertainty of Russia will extend the Ukraine corridor. They want to be allowed back into the SWIFT accounting program and have their banks reduce sanctions that are financing their exports. We are watching pretty closely the Ukraine exports to Eastern Europe from countries like Poland and Hungary have banned imports of Hungary grain because it's reducing profitability for farmers, but at the same time, the EU refused to accept that ban. And then in the wheat market, I think it's all weather and jumping around based on whatever the latest headline is. Still some concerns about global world economy slowing, what the Fed's going to do with interest rates, and where direction the dollar is going to go.